Good morning, everybody. It's just Jeff from Serene Education with the full major news update for the 12th of February 2013. Hi, everybody. Hope you had a fantastic weekend. Apologies, we did not do the video analysis yesterday as we had students over the weekend. So, without fail, let's get on with the full major this morning, starting with the euro against US dollar. Let's have a look at the weekly. Okay, what's been happening? Well, last week in particular, very negative day, and what we did end up with was this bearish engulfing candle at the institution moving average. What we wanted to see was the prior week having broken through this institution moving average. We wanted to see price actually now finding support above the 13,500, and then we could have seen price heading higher. However, that wasn't the case. No support was found, and sure enough, we had this bearish engulfing candle, which engulfed the whole of the previous week, which is not a good sight to see. Because it doesn't find any support above that 3,500 mark, which is the institution moving average. If it gets above that, then it's plain sailing on the way to the upside, with the market target being the long term all the way up here to these areas that we saw in March, April of 2011, around about the just short of the 1,500 mark. So trading below the institution moving average again on the near term, and you can quite clearly see that on our going into the start of this week, very indecisive, a very small wick, not a lot of movement, a lot of hesitation, and that's reflected on our daily chart. So there we go, this black line over here constitutes to that all-important institution moving average above price, and you can quite clearly see that price is now trading below that. Okay, so as it stands at the moment now, it's now consolidating at the 13,500 mark, and this is a area of support and resistance that I've plotted. As long as it stays above that, then there's more likely of a chance for price to actually reattempt these highs that we had recently. Failure to find support above this area or to consolidate above this area, and we see a break lower, then we should start looking for opportunities to the downside with these areas over here in mind. Okay, so yesterday's bearish, bullish engulfing candle at the support here, we would like to see price now making headway back up towards this 13,500 to start with. However, you can see on the Asian session, not all that fruitful overnight. A lot of negative sentiment flowing through, and you can see on the 4-hour in particular, a bit of upside through the starts of the Asian session on the Sydney Open. However, Tokyo and stuff got very indecisive, and we've seen price drop again. So very indecisive over the past 16 hours. 16 hours or so, and price is now reverted to the downside. So what we need to do intraday, or see intraday, if we're going to see look for any intraday trades, is one of two things. We either want to see a nice bearish engulfing candle closing lower than 13,500 to set us up for the foreseeable future towards that 13,200 as our first target, or we want to see a bullish engulfing candle sometime today to see price bouncing higher, and in doing so reattempting that 13,500 near term. Next up is sterling. Let's have a look at the weekly chart. Here, a lot of indecision going into the 16,300 starts of January. A very strong exhaustion candle, and prices reverted to the downside. Nice bearish engulfing candle, saw price taking that week right up until the support at 5,900, and then from then on we've seen price breaking that 5,900, which happened to be consolidation support, and in doing so breaking below the institution, which now confirms this is quite negative, and sure enough, the past couple of weeks we've seen price now heading lower. Consolidates of last week, after the prior week actually showing us negativity, it was a breakout, the pullback, which is consolidation candle here. And now what we're seeing is the continuation occurring. This week, very bearish indeed. If I go to the daily, you can quite clearly see now if I zoom out, this week has started very negative indeed. We saw Monday, yesterday, bearish engulfing, then failing to actually break above the institution. You can see quite clearly here, price consolidating under the institution, beforehand being above the institution. So once it was trading above the institution, pretty much positive. Yes, it was positive, going sideways, apologies, but positive nonetheless because it's above the institution. Now, for the first time, for the start of this year, trading below the institution, and now subsequently looking very negative indeed. A lot of consolidation, however, but you can see near term 15,700 in particular, a very strong support area psychologically. Price has been consolidating or trading between 2 points at this area, and yesterday's candle now finding resistance and now trading below this area here at 15,700. So ultimately what we should be looking for now is for shorting opportunities for the foreseeable future. The further away it gets from the institution, the more likely it's going to keep dropping, and if that's the case, then we could see price heading all the way down to these areas here at 15,300. Ultimately, it's a long-term target. there is roughly a consolidation area, roughly around the 15,500 mark on our daily. So that'll be a nice target to look for going forward. If you look at the 4-hour, you can see quite clearly this downtrend. Notice where the institution moving averages, guys. Notice before a lot of blue, now there seems to be more red. So it confirms that we should be looking for negative sentiment. Near term, if you're looking intraday, you can see we had a consolidation. Okay, the past couple days has seen price consolidating sideways, and we would need to see price actually closing lower than that. There happens to be a lot of indecision candles here, and we don't trade indecision, we trade decision. So we want a nice bearish engulfing candle to break lower than this area here to confirm that we are now seeing a reattempt of that negativity. And once we get that bearish engulfing candle, look to see if it all fits into your money management, and then just pull the trigger. Onto the US dollar Swiss franc. Let's have a look at the weekly on this particular pair. Yeah, you can see price has been dropping noticeably since June, July of last year. And notice the institution is pretty much above price. So we know it's still negative. We have seen a major pullback since August of 2011. However, we've just been consolidating sideways. We haven't really made any higher highs recently. And as we reached into the institution in August of last year, we saw this bearish engulfing candle, and price has just been falling to the downside very slowly. A lot of consolidation on its move to the downside. So what has it been doing? So what I've done is I've taken a fib retracement from the low that we saw in August of 2011 to the current high that we saw in end of July of 2012. And it's drawn fib retracement areas, 23 in particular, 38, 50, 61, 78.6. And you can see the 23.6 for a long period of time acted as a very strong support. And then we had this little bearish engulfing candle here, confirming price was still looking negative. We saw the pullback, and now we're seeing the continuation lower. Excuse me. But you can see the past week, price has found support near term, and once again, price has reverted to the upside. Notice we are still seeing swing lows, okay, which dictate that we are still looking for negative sentiment. And you can see that the histogram on the other side is pretty much still red. As long as it maintains below 930, we should still be looking for opportunities to the downside. Okay, so what we want to do is we want to see or look for setups to see if price can trade lower. Okay, so you can see now my institution moving average is still above price, which is a negative signal. You can see recently there seems to be more red than blue, so that confirms that negativity is there in the direction of the bearishness. Beforehand, it was positive and we were trading above the institution. Now the institution moving average, the green line, is above price, so that's got to be classified as bearishness. And sure enough, the histogram on either side, or the ribbon, is telling us we should be looking for bearish sentiment. Near term, however, we have seen indecision. We would like to have seen, I was talking about this a couple days ago, like to have seen a nice bearish engulfing candle because price is trading at the underside of a price support area here at 910. That failed to materialize, and we saw this bullish engulfing candle, and since subsequently we've seen price moving higher, very tentatively though. Not a lot of movement within these days, very, very indecisive on the way to the upside. So not a very decisive bounce, however, still trading above that 910. And as long as it's above this 910, then there's always more likely the chance to be upside movement intraday. And if you're going to look for further upside movement to the upside, we've got to look at potential target points, and the ultimate target over here is clearly that 930, which happens to be my weekly and daily support and resistance level. So intraday, look to see if there's any buying sentiment. You can see quite clearly how my 4-hour chart, for example, we had that buying candle above here. It's trading higher. It's broken the downswing that we've seen intraday for this particular time frame, and sure enough, you can see that price is now consolidating, or has been consolidating, under 920. Now 920, the institution moving average. Get above that, and it's clean air up towards that 930. So you can quite clearly see a nice little target here. There are 10, 20, 30, 40, 50, 60 odd pips and change to the upside. Take away your spread. So there's more than enough capital to the upside, but we do need to see price actually trading above this 920. So use that as a yardstick. Use that as your resistance intraday. Get above 922.100 with a nice bullish engulfing candle, ideally on a 4-hour, and you're on your way towards that 930 mark near term. Get to 930, take those profits and run, because you can quite clearly see it is a major resistance level, going all back to our weekly charts in particular, because that's the 23.6 fib retracement area, and you can see a noticeable amount of resistance at this level. Last pair of the day is US dollar Japanese yen. Let's have a look at the weekly. This pair And you can quickly see the US dollar beating the hell out of the Japanese yen. And we've seen a very strong uptrend, a nice 70-degree angle since October, really moving higher. And in doing so, you can quickly see my horizontal lines here depicting my fib retracement areas I've taken on a monthly chart of this particular pair to give you these long-term targets. And you can see the 23.8 mark here at 87, reach, target hit, bang, taken. 38.2, the next one here at 9400. Notice last week, a lot of indecision going into this one because people, obviously, if they bought over here at the break of this bullish engulfing candle here, would have looked at this area here at 38.2 and our long-term targets at 9400 as a target area. Sure enough, get there, profits take, so you see a pullback on the market, and that ends up with an indecision candle. So we want to see a decisive candle to see if prices are still going to move higher. And if you look at the candle that's in play now, you can see quite clearly we are testing those areas above the 9400 mark. If price can actually stay above 9400, you can see on the daily here, yesterday's daily closing above. So now if you can see price actually finding support above this area here at 9400, then we should be targeting further upside. On this particular pair, everything is looking positive on this chart. Everything is looking blue for buy. As long as 9400 now stays as support, then we could see price rallying higher. And if it rallies higher, then we should be looking at our 50% fib mark. And you can quite clearly see here, I have to go to my weekly chart to see where that next target is likely to be. And we're looking at 100. Okay, so clear, nice evenness to that mark again. So this pair, and any yen crosses for that matter, are looking very, very good at the moment. So look to capitalize on this positiveness. Make sure you get a nice bullish engulfing candle. You can be quite aggressive. Look at the 4-hour chart. Get above the 9450 mark, and then off we go. Look at your money management rules, and then push the button. So on your yen, look for 9400 to remain as support. And as long as we have support above 9400, then let's look higher. That's it for today, guys. Short and sweet. If you're using this particular template, please follow the rules of it, okay? We have rules. Everything out there has rules to abide by, and back it up with sound money management, okay? You can have the best strategy in the world, and I keep saying it, best strategy in the world, and if you don't back it up with sound money management, it's worth nothing, okay? So please, 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 please abide those rules. Otherwise, have a fantastic trading day. Please be aware of any news announcements out today. There happens to be a lot of news, especially for the Great Britain markets. And then we have some speakers in the federal budget balance this afternoon for the US market. And then we have 1 or 2 announcements later this evening before the Asian session open. But just take it all on board, guys. Make sure you understand how to read the actual fundamentals and how they will reflect in price action. If you don't understand, rather stand aside. Let the news come out, and let's see how the market actually digests it before we move further. Otherwise, have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, you trade serenely.